Fidelity predicts a $1 billion Bitcoin by 2038 at a time where this blue chip is outperforming the majority of the crypto market. Two altcoins that are glaring exceptions here are both Quant and Polygon, who have been outperforming Bitcoin throughout the entire bear market and the accumulation phase this year. The one thing they have in common is major adoption by financial institutions and governments. We have some very interesting connections between BlackRock, the largest asset manager in the world, and Quant, as well as JPMORGAN confirming they made their very first blockchain trade via Polygon. We are going to break down all of this for you guys and more in today's daily market update. Last week was a brutal one for the crypto markets. We can see in the top 10 alone that BNB is down over 23%, Cardano down over 30%, Dogecoin down 15%, Tron down 15%, and Solana and Polygon both down 30% respectively. Despite having very nice bounces on the day, a lot of these altcoins are still falling knives, and unfortunately, it would appear that the crypto market does want to move lower after Bitcoin has closed below a key technical indicator. Now, interestingly enough, we can see here that Bitcoin and Ethereum, the two biggest blue chips in the industry, have been some of the best performers on the week, a sign that people are feeling a lot more comfortable in the blue chips, as both of them have been off of the SEC's hit list in terms of being a security. And I do think this is going to be the next narrative for the markets, is the regulatory risk that all the altcoins face, while Bitcoin and Ethereum appear to have avoided them altogether. Although Bitcoin and Ethereum are propping up the rest of the crypto market, Bitcoin unfortunately has closed below the 200-week moving average, which does lead me to believe that there is still a lot more pain ahead for these altcoins. Now, this is something we had been talking about on the channel over the past week. I was warning that Bitcoin has been making a set of lower lows or lower highs ever since topping out at 31K back in April, and it was getting dangerously close to testing the 200-week moving average. We can see here actually validating it 3 or 4 different times as a level of support. Now we are on week number 5 here, where the weekly candle has finally broken below the 200-week MA. And historically speaking, we can see that this key technical area has acted as a very strong area of support for Bitcoin. So the fact that we are below it does lead me to believe that we will see some continued bearish momentum on the markets here. Now, zooming out and taking a look, you can see that the orange line, which is the 200-week MA, has historically been a very strong area for Bitcoin, and that's why we do place a lot of importance on this technical indicator. Back in 2015, we can see that it actually bounced off the 200-week MA at around $222 and then proceeded to run all the way to $20,000 by 2018. Back here in 2018, after we actually saw that bull market peak, Bitcoin crashed all the way down to $3,500, once again validating the 200-week MA as a clean area of support and bouncing all the way up to $14,000. Once again, in 2020, we saw Bitcoin bounce off the 200-week MA here at about 5.3K, and this led us to the previous bull run all-time highs of $20,000. This most recent bear market was the first one where Bitcoin not only broke below the 200-week MA, but did spend a sustained period of time below it. In fact, if we zoom in here, you can see that Bitcoin got rejected at the 200-week MA in February of this year, fell from 25,000 all the way down to 20,000, and then ripped above it, which did lead to that run up to 31K. Unfortunately, we are back below it, and based on what has happened here from prior history, it would appear that the crypto market is going to be suppressed over the next couple of months. Now, we've also noted here on the channel that crypto is very cyclical, and if we actually take a look at the past 2 years, you're going to notice that June and July were not exactly the best months for crypto. So we can actually see here, let me just get it for you guys on the chart, that in 2021, we actually saw Bitcoin collapse here from about $64,000 all the way down to $28,000, so about a 50% correction, and then it proceeded to rally to those all-time highs at about 69K. And then again here in June of last year was when we actually saw the first major capitulation, when Bitcoin fell from about $47,000 in March all the way down to about $25,000, $23,000 by June. This is when we officially broke below below the 200-week MA, and from then it took a long period of time to actually get ourselves back above this area. So we can see that from when Bitcoin actually broke the 200-week MA, it took about, how much was this, 280 days to get back above it. Interestingly enough though, we can take a look at the Bitcoin halving clock, which is actually set to occur here in 308 days. So the 2024 halving is expected on April 15th of 2024, and ever since the bull market began, this has been the thesis on the channel, is that we are probably not going to see a sustained move to the upside until the halving occurs in 2024, and we will probably peak out here in late 2025 in terms of the price action for the next bull cycle. So this has been the thesis on the channel. We have been waiting for lower prices. We did a ton of accumulation throughout the bear market, and if you have been with us this whole time, you should be well prepared for this accumulation phase leading into the next Bitcoin halving. So in the meantime, I don't really care too much what happens. All I'm looking for is potentially lower prices to once again load up on Bitcoin if possible, and just waiting for the Bitcoin halving, which is where I think that the real money will be made in this market. Obviously, until then, it is going to be choppy waters, and the next key level that I am looking for on Bitcoin in the near term is just simply the 20,000 area. This is the 2018 all-time high, and given that we have officially broken below the 200-week MA, broken below the bull market support band, and broken below 25K, which is a very strong area of support, I do in fact believe that $20,000 would be the next strong buying opportunity. Now, I do want to hop into the news for Bitcoin here, as we saw Fidelity directors of Global Macro say that Bitcoin is a unique asset because it has both the supply characteristics of gold and the adoption curve of a disruptive technology. And this is absolutely the case. I mean, a lot of people value gold as a hedge against inflation because of its fixed supply. First of all, I think Bitcoin does fixed supply even better because there is still gold hypothetically to be found out there to be mined, whereas with Bitcoin, we know there's only 21 million out there. On top of that, if you go ahead and try to pay for something in gold, tell me how that's happened. Have you ever gone to the grocery store and cut a gold brick to pay for your groceries? I don't think so, but Bitcoin does also act not only as a store of value, but as a transfer of value, which does give it a massive advantage over gold. Now we compare Bitcoin that has about a $500 billion market cap, and then gold with over a $13 trillion market cap, and we can clearly see how Bitcoin does still have a ton of room to grow in this aspect as a global reserve currency. And due to Bitcoin's decentralized nature, it has also received that regulatory clarity as being a commodity similarly to gold and not a security, which is the problem that really has been plaguing majority of the crypto market and why we have seen this crash. So we are seeing institutions get a lot more bullish on Bitcoin here, and we also have Fidelity say that one Bitcoin may be worth $1 billion. Fidelity's director of Global Macro also says he believes Bitcoin could hit $1 million before this decade is over, so by the year 2030. Now, the demand model here is based upon Metcalfe's law, which holds that as the number of users of a network grows linearly, the value of the network grows exponentially. Thus, if the number of users is doubled, its value would grow at 4 times or to the square of 2. So this demand model grows steadily to about $1 million per Bitcoin by the end of 2030. Additional reasons for this bold prediction include the devaluation and unraveling of the current fiat monetary system, the exponential growth in the values of networks, and increasing demand and adoption in the crypto space. On the note of the devaluation and unraveling of the current fiat monetary system, we saw a very similar note here from BlackRock, who basically issues a warning over the debt ceiling drama, and this could in fact be very bullish for Bitcoin. We know that ever since the whole fiasco with the US printing trillions of dollars, with the raging inflation, and now with the debt ceiling drama, that people are in fact concerned the US dollar may in fact lose its status as a global reserve currency. This sets the precedence very well for something like Bitcoin, the thesis for a decentralized currency here who actually does not have a sole issuer. There cannot be more printed with a finite supply, and completely cuts out the need for a middleman through its peer-to-peer transaction facilitation. So that is why Bitcoin is really seeing a lot of adoption and increasingly bullish notes here by these financial institutions. And now I do want to talk into some altcoins as well that are receiving love from these bigger players. I think that it's not a coincidence that both Quant and Polygon have actually been solid outperformers of Bitcoin throughout this bear market. And I do believe the main reason for this really is because of that mainstream adoption they are seeing. They are not only targeting retail. In the case of Quant, they're not targeting retail at all. They're looking for the big money players, and that is why I think these altcoins will continue to be successful. So we see Larry Fink, the CEO of BlackRock, talk about tokenization, saying it will be the next generation for markets. So the whole idea here is taking physical assets and essentially putting them on the blockchain, turning them into digital receipts. And we can see here that Quant Overledger is in fact stacked with the technology to make this happen. The Quant Overledger offers multiple use cases for the smart tokens, including central bank digital currencies, cross-border payments, and next-gen payment systems, alternative asset digitization, carbon credits and certificates, commercial bank tokenized deposits, and fund tokenization, and can also actually help with tokenizing the supply chain in terms of supply chain monitoring. We can see that this technology has very powerful use cases, as Citi also predicts $4 trillion of tokenized assets in the future. So clearly, I do believe that tokenization and centralization are going to be very common themes in the next bull run. And unless you are Bitcoin, a decentralized currency and a store of value, the altcoins that I do suspect are going to succeed the most are those that are appealing to these financial institutions, allowing them to build on their technology and help increase the efficiency and productivity of their business. That is the value of blockchain that these banks see, and that is exactly what Quant is targeting. In fact, if we actually go to the frequently asked section, the questions here of Quant, and they talk about the Quant token specifically, and they even ask basically about the Quant token, saying, what do you think about Quant? Can I list Quant on your exchange? And they literally say right here on their very own website that they are not looking to appeal to retail investors. They don't care. They have a much bigger target audience in the terms of their financial institutions, governments, and corporates. It says right here, thank you, but we have no interest in promoting our token as a cryptocurrency. It is a utility token for the Quant Overledger. The Quant token is an integral part of our platform, used most notably to pay for software licenses and sending transactions. Gilbert Verdian, the CEO of Quant, is a man with many connections, and we can actually go down here to his volunteer experience alone, and we can see here the Digital Pound Foundation, the Federal Reserve System, as both on the Fed Payments Improvement Committee and the Secure Payments Task Force, EU Blockchain Observatory, and Forum member for Blockchain Policy and Framework Conditions Working Group. We have also noted here that Gilbert Verdian has been confirmed to be working with the Bank of England. One of Quant's partners, Nexi, did in fact have a successful trial of a digital currency with the European Central Bank, and there are just tons of connections here to be made between Quant, Gilbert Verdian, and a lot of these big institutions and governments. And very importantly here, the Quant utility token is in fact necessary for enterprise licenses, developer licenses, platform fees, identity creation and account verification, and transaction processing, meaning there is in fact a specific link and connection between the Quant Overledger and the adoption of this technology and the Quant utility token itself. Now, speaking of Quant and just outperforming Bitcoin, that's why I do want to show you guys this chart next, because you can see here that ever since September of 2021, or sorry, really since January of 2021, Quant has been consistently outperforming Bitcoin. It goes on the massive runs of outperforming and then massive corrections versus Bitcoin. However, over long periods of time, it has been proven to be in a sustained uptrend versus blue chip, something that majority of these cryptos and these altcoins specifically can't really say for themselves. Now, another altcoin here that has done a very good job of outperforming Bitcoin is in fact MATIC. Unfortunately, it does appear that MATIC does have a bit more regulatory risk at the moment, as the SEC has in fact gone ahead and deemed MATIC a security. And just like Quant, it has recently gone on a big wave of underperforming Bitcoin, actually down about 57% currently versus its Bitcoin pair. But we can see here that regardless, Quant still has been in a pretty sustained uptrend versus the blue chip, which does, in my opinion, separate these two altcoins from the rest of the crypto market. And that's why we have been covering them so heavily on the channel over this past year. I do truly believe that over time, 99%, maybe 95% of altcoins are just set to go down on their Bitcoin pair. And that's what I do tend to look at as well, as not only my altcoins versus their USD valuation, but also their Bitcoin valuation. Because if you're buying an altcoin and it's only going up 10% and Bitcoin's going up 20%, you're still losing money that you could have made. That's opportunity cost. Not to mention you're taking on more risk buying altcoins. So you want your risk to at least be worth the reward. And in the case of both Quant and MATIC, yes, they are riskier bets than Bitcoin, but I do think that the reward here is much greater. And that's why I do continue to be invested in Quant. And I am keeping an eye on MATIC to see if I can grab some on this dip. Now, keep in mind, if Quant did an ETH run of 2017, Quant would roughly get to an $8,600 price tag at a market cap of $125 billion. Now, if Quant does just half of that at $4,300 per token, that's only $62.5 billion market cap. And this tweet actually reminded me of something, so I want to go over to XRP on CoinMarketCap. And I actually believe that XRP's peak in the 2018 bull run was in fact in and around that $125 billion market cap. So let me just confirm that here for you guys. But the point is here is that if something like XRP could hit that $125 billion area, I do truly believe that Quant could also hit that level. And the difference between XRP and Quant is that XRP has 100 billion tokens circulating, while Quant only has 14.8 million. Okay, I am bullish on XRP, but the matter of fact is when it comes to Quant, it does have a much higher ceiling for gains in my opinion. Yeah, we can see here that XRP actually peaked out even a bit higher at about $130 billion. In and around that range anyways. And I've actually referenced this on my Twitter before, is the fact that yes, Quant is capable of, if it does hit that $125 billion, $130 billion market cap, that Quant does in fact have that 4-figure potential. And if it goes higher than that, we could even be looking at a 5-figure price target in the future. So that is why I'm bullish on Quant. And we also see that Polygon here does offer asset tokenization through its proof of stake chain. JPMORGAN in fact did make their very first public blockchain trade using Polygon, and this was actually a forex trade here, which they tapped into Polygon. So JPMorgan's Onyx, the bank's blockchain division for wholesale payments, joined Singapore's DBS Bank, Japan's SBI Bank, and Singapore's exchange digital asset platform in the first phase of this testing. So what they went ahead and did was successfully tokenize Singaporean dollar deposits, as well as SBI digital assets tokenized Japanese yens. So very interesting. They are choosing to tap into Polygon here. I don't think it's a coincidence given how powerful Polygon has actually been in terms of really getting that Web 2 adoption and bringing them into Web 3. So on that note, I hope you did enjoy the content in today's video. You know what to do. If you made it all the way to the end, you are an absolute champion. Let me know in the YouTube comments down below and claim that champion status. I hope you are all having an amazing start to your week, and I hope to catch you in the next one. Peace out for now.